Thank you, Liza. Bismillahirrahmanirrahim. Assalamualaikum warahmatullahi wabarakatuh dan salam sejahtera semua orang. Terima kasih kerana menghadiri sidang akhbar pada pagi ini mengenai prestasi ekonomi negara pada suku ketiga tahun 2025 dan juga perkembangan moneteri dan kewangan oleh Bank Negara Malaysia dan Jabatan Perangkaan Malaysia. Bersama saya ialah Ketua Perangkawan Malaysia yang bagi Datuk Seri Dr. Muhammad Uzi Mahidin. Sebagaimana kita sedia maklum, Jabatan Perangkaan Malaysia merupakan agensi rasmi yang mengumpul dan juga menerbitkan statistik KDNK negara kita. As per our usual practice, please allow me to continue the presentation in English for the benefits of our international audience. Global growth slowed in the third quarter of 2025. Growth momentum in major economies was weighed down by tariffs, while uncertainty remained elevated. Regional trade activity is after an earlier surge to beat the tariff deadlines, driven mainly by lower trade in electrical and electronics and machinery and equipment. Inflation moderated, especially in emerging economies, due to lower agricultural prices amid the higher global supply. Before I share our assessment on the economic outlook, let me first invite Datuk Seri Dr. Uzi to announce Malaysia's GDP performance in the third quarter of this year. Over to you, Dr. Uzi.
Terima kasih yang bagi Datuk Seri Governor. Assalamualaikum warahmatullahi wabarakatuh. Salam sejahtera, very good morning. Pada suku ketiga 2025, ekonomi Malaysia berkembang sebanyak 5.2%. Peningkatan ini didorong oleh perbelanjaan isi rumah yang terus mampan dengan pasaran pekerja yang positif, aktiviti pelaburan yang stabil serta pertumbuhan ekspor yang berterusan disokong oleh sektor E&E, aktiviti pelancongan yang kukuh serta pemulihan ekspor berkaitan perlombongan. Dari segi pengeluaran, sektor perkhidmatan meningkat sebanyak 5.0%, sektor pembuatan meningkat 4.1%, sektor pertanian berkembang sebanyak 0.4% dan sektor perlombongan dan pengeluaran pulih sebanyak 9.7%. Manakala sektor pembinaan pula terus meningkat 2 digit kepada 11.8%. Sementara itu, dari sudut permintaan, perbelanjaan penggunaan isi rumah meningkat sebanyak 5.0%, pelaburan sektor swasta dan awam masing-masing meningkat sebanyak 7.3% dan 7.4%. Perbelanjaan kerajaan bertumbuh sebanyak 7.1%. Manakala ekspor bersih negara pulih sebanyak 17.7%. Bagi terma pelarasan musim suku tahun ke suku tahun, KDNK negara menunjukkan peningkatan yang lebih kukuh sebanyak 2.4% berbanding 2.2% pada suku kedua 2025. In the third quarter of 2025, the Malaysian economy recorded a strong growth of 5.2%. This was contributed by household spending, steady investment activities and continued export growth, supported by E&E sector, robust tourism activity and strong recovery in mining-related export. On seasonal adjusted quarter-on-quarter basis, GDP saw stronger growth momentum of 2.4%, higher than the 2.2% recorded in the second quarter of 2025. On the expenditure side, domestic demand was driven mainly by sustained domestic demand and higher net export. Private consumption was supported by positive labour market condition and policy measures. Meanwhile, investment growth was driven by further capacity expansion by firm and robust construction activities, as well as continued capital expenditure by public corporation. On the external front, the expansion in net export was driven by improving export and a sharper moderation in import, particularly for intermediate and capital import. On the supply side, all sectors continue to expand. Sustained growth in the services sector was driven by consumer-related sectors. The manufacturing sector registered a higher growth driven by stronger production in E&E and consumer-related goods. The construction sector continued to record robust growth across all subsectors. In the commodity sectors, the agriculture sector experienced a moderation driven by slower growth in rubber, oil palm, and other agriculture subsectors. However, the rebound in mining sector reflected recovery in LNG and crude oil production from post-plant maintenance. Now I move on the balance of payment. The current account of the balance of payments recorded a higher surplus of RM12.2 billion or 2.4% of GDP in the third quarter of 2025. This was mainly due to higher good account surplus, reflecting improved manufacturing and mining-related export amid lower capital and intermediate imports. The services account turned into a surplus for the first time since third quarter 2011, supported mainly by higher travel received and construction-related services. This marks a significant milestone after 56 quarters since the last surplus, supported by solid growth in the travel component. FDI recorded an inflow of RM8.5 billion during the quarter, mainly due to larger equity injection. These FDI were channeled mainly into services sector, predominantly into ICT and financial services subsectors. The FDIs were primarily from Singapore, China, and Japan. These equity injection inflows were partially offset by outflows in reinvestment of earnings amid regular dividend payments and losses registered by several foreign companies in the manufacturing sector. Thank you. Over to you, Governor.
Terima kasih, Datuk Seri Jose. Let me now continue with the outlook of the economy. Global growth and trade are expected to moderate further next year, reflecting the full impact from tariffs. The negative effects of tariffs and uncertainty, however, will be partly cushioned by the fiscal support and the monetary policy easing, which will help sustain domestic demand. Supportive labour market conditions in major developed and emerging economies will also continue to aid consumption activity. Meanwhile, global inflation is expected to moderate further, and this is driven by lower commodity prices, softer demand conditions, and also a weaker dollar to a certain extent. Malaysia's economy grew by 4.7% in the first 9 months of this year, and this is well within our forecast range of between 4 to 4.8%. In fact, at this rate for this year, we may record a growth rate that is closer to the upper range of this forecast. And moving into 2026, as announced by the Ministry of Finance last month, economic growth is expected to expand between 4 to 4.5% next year, and it will be driven by domestic demand. Household spending will be supported by the continued employment and wage growth, the income-related policy measures, and also the additional cash transfers by the government. Furthermore, investment activities will be sustained amid the progress of infrastructure projects, realization of approved investments, and the implementation of our national master plans. On the external front, we expect moderate export performance as tariff and global demand pressures will be offset by the continued demand for E&E goods, inbound tourism, and recovery in the mining-related exports. Consumer spending will continue to be the backbone of Malaysia's economic growth, and this is supported mainly by the positive labour market conditions. And going forward, household spending is expected to remain resilient, driven by the continued employment and wage growth, particularly in domestic-oriented sectors, as well as the income-related policy measures. Moreover, the healthy household balance sheet and the government's cash assistance will provide additional support to consumer spending. Growth will also be supported by continued expansion in the investment activity. Recent trends continue to reflect strong investment growth across both structures and machinery and equipment. Forward-looking indicators from the latest investment approvals by MIDA point towards steady investment momentum underpinned by healthy pipeline of planned investments. Furthermore, the continued implementation of multi-year public projects and high realization of approved private investments, all this will make the domestic investment landscape more resilient. Let me touch a little bit on the data center. The data center industry has grown exponentially in Malaysia. In fact, it is one of our largest FDI contributors in the recent period. There are signs that data centers have started to contribute to Malaysia's ICT services exports. For example, between January to September this year, based on Bank Negara Malaysia's internal cash BOP data, data center exports of services amounted to 10.7 billion ringgit. And this is significantly higher as compared to the same period last year. It was about 1.2 billion last year between January to September 2024. However, success goes beyond numbers alone. It is also about ensuring that these investments create long-term benefits for the nation. The reality is that data centers demand significant energy and water resources, and we know that, while generating relatively fewer direct employment despite it being high-paying. The key to successfully maximizing the spillovers from data center lies in effective strategies and policy execution, focusing on a few things. One, in terms of strengthening both forward and backward linkages to develop industries within the data center ecosystem. Second is managing externalities from resource consumption and current account pressure through sustainable resource management and reducing import dependency. And third, by developing future-ready talent that is equipped with industry-relevant skills to serve the data center needs. Let me move on to trade now. Domestic exports, which refers to exports of goods that's locally produced, has broadly moderated from the highs that we observed last year, but is slowly recovering as lower exports to the US were offset by higher exports to other markets, such as the European Union, Australia, and Mexico. And this speaks about our diversity of our export markets. Additionally, exports of the E&E products, which make up 39% of our domestic exports in 2025, have remained resilient and offsetting drag from certain segments of non-E&E exports. Meanwhile, imports growth have eased, partly reflecting base effect from the surge in capital imports that we saw in third quarter last year. This lower pace of imports relative to exports contributed favorably to the trade balance, with the third quarter 2025 recording Malaysia's largest trade surplus since 2023, supporting the current account surplus. Moving forward, the current account will be underpinned by resilient E&E exports amid the continued AI-related demand, as well as recovering mining-related exports post the scheduled maintenance work. However, exports may still face some headwinds as the full impact of tariffs are realized. Higher tourism activity, supported by the improved flight connectivity the continued visa exemptions, and the promotional efforts amid the Visit Malaysia year next year will provide further support to tourism. Moving on to the balance of risk, for 2026, the growth outlook is subject to both upside and downside risks. Downside risk includes further slowdown in trade as a result of higher tariffs, weaker sentiment from uncertainty affecting spending and investments, as well as lower than expected commodity production. On the other hand, growth could be higher with more pro-growth policies in major economies, favorable outcomes from remaining US trade negotiations, higher demand for E&E goods, as well as more robust tourism activity. Let us now turn to inflation. Headline inflation remained unchanged during the quarter at 1.3%, while core inflation increased to 2%. The higher core inflation added some upward pressure on headline inflation. However, this was offset by declines in some administered prices, namely electricity and diesel, which kept the headline inflation stable for the quarter. In part, the lower administered prices reflected the impact of recent policies, namely the electricity tariff restructuring, which resulted in lower electricity bills for most of our Malaysian households. And looking ahead, headline inflation is expected to remain moderate, ranging between 1% to 2% this year, and between 1.3% to 2% in 2026. And this reflects the steady domestic demand and the moderate cost conditions, as well as the government's continued efforts to cushion the impact of domestic policy reforms on most households in the country. In terms of risk, the outlook for both 2025 and 2026 remain largely subject to global trade and geopolitical uncertainties. Upside risk could stem from renewed trade uncertainties or escalation in geopolitical tensions, which could drive up global commodity prices and raise imported input costs. At the same time, there could also be broader spillover effects from domestic policy measures such as the SST expansion, but these are expected to remain limited. On the downside, inflation could ease further if global growth weakens, leading to softer commodity prices, weaker export demand, and more moderate domestic demand conditions. In addition, the sustained easing in input costs from a stronger ringgit could also exert further downward pressure on our inflation. Turning to monetary policy, the OPR was maintained at 2.75% at the recent November MPC meeting. We expect the resilient domestic demand to continue driving Malaysia's economy in 2026, while inflation is projected to remain moderate. Given these domestic prospects, we assess that the current monetary policy stance remains appropriate and supportive of the economy amid price stability. The earlier OPR reduction that was taken in July is also working its way through the economy and will lend some support to growth into 2026 as well. The MPC will continue to monitor the ongoing developments and assess the balance of risk surrounding the outlook for both domestic growth and inflation. Moving on to the ringgit, in the third quarter of this year, the ringgit appreciated by 0.8% on a nominal effective exchange rate basis against the currencies of Malaysia's major trading partners. The ringgit also remained broadly stable against the US dollar during this period. Year to date, as of 12 November, the ringgit has appreciated by 5.3% on the NEER basis and by 8.2% against the US dollar. The ringgit's movement was driven by both external and domestic factors. Externally, the US Federal Reserve's monetary policy easing in September Coupled with expectations of further rate cuts amid the growing concerns over the US economy's outlook, this helps support the ringgit. Additionally, a reduction in tariff-related uncertainties, although they remain elevated, provide further support to the ringgit during the quarter. On the domestic front, Malaysia's positive economic prospects, together with the government's commitments on the structural reforms and fiscal sustainability, have also become more visible, and this will continue to provide the medium-term support to our ringgit. Bank Negara Malaysia will also continue to ensure the orderly functioning of the domestic foreign exchange market and two-way flow through the coordinated efforts with the government and corporates. And this includes through the full implementation of the Qualified Resident Investor or the QRI program, which was rolled out in July this year. The program, which provides foreign exchange policy flexibility to encourage resident corporates to repatriate foreign currency investment income and convert into ringgit, this has yielded encouraging results. As at the third quarter of this year, more than $2 billion of inflows have been recorded under this program. In the third quarter of this year, looking at credit growth in the private non-financial sector expanded by 5.9%, following an increase in credit to businesses. And this was supported by higher growth in outstanding corporate bonds and business loans, which grew by 7.3% and 5.4% respectively in the quarter. The higher growth in outstanding business loans was mainly driven by increase in investment-related loans, particularly among the non-SMEs. For households, outstanding loans grew by 5.7% amid some moderation in loan growth for personal use. The average lending rates on outstanding loans, which includes household and business loans, declined by 21 basis points, and this reflects an effective pass-through from the recent 25 basis point reduction in the OPR that we took in July this year. In the third quarter of this year, banks and DFIs continued to support SMEs activities with steady outstanding financing growth at 8.1%. Across 3 quarters in 2025, we saw a consistent upward momentum in financing supply for the SMEs. And more positively, financial repayments has kept pace with disbursements, reflecting sustained borrower capacity amid the ongoing economic uncertainty. Financing approvals improved in the quarter across working capital and investment-related purposes, particularly in the services sector. The banking system continued to play an important role in supporting economic growth during the quarter. The bank's strong financial positions, including capital and liquidity buffers, ensure that they remain well-positioned to meet the domestic economy's financing needs. The quality of business and household loans remain sound, with low and stable impairment ratios. Newly restructured and rescheduled loans are also limited. This has been supported by strong loan affordability assessments and the prudent provisioning practices by our banks, which help ensure banks maintain sufficient buffers to absorb any potential losses. Let me close with a very quick summary of what I've shared earlier. First, the Malaysian economy recorded a strong growth of 5.2% in the third quarter of this year, and driven by sustained household spending, steady investment activities, and higher net exports. Given the lingering global uncertainty, the balance of risk is subject to both downside and upside risk, while headline inflation is expected to remain moderate this year. Malaysia's economy grew by 4.7% in the first 9 months of 2025, within the official forecast range of 4 to 4.8%, reflecting our continued resilience in the face of global challenges. Looking ahead, global economic conditions will remain challenging, and we need to keep strengthening our economic buffers to weather any headwinds that may come our way. With that, I've come to the end of the presentation. My team and I, as well as Datuk Sri Uzi and his staff, will be very happy to take on your questions. Thank you very much for your attention.
Thank you, Governor. At this juncture, we would like to call for questions from the media. We will take your questions in 3 segments. The first on the economic topics, the second on the financial sector topics, and the last on other topics. If you have any questions, please feel free to raise your hand. Our colleagues stand ready to pass you a mic. Please state your name and publication before sharing your question. Now, I would like to invite questions from the floor on the first segment, the economy. We will take a few questions in one go. Okay, from CG.
Hi, thank you very much for your presentation. Can we understand that the balance to the economy is evenly balanced between up and down, both directions?
Can I have another question on the economy? Lady on this side, from the H.
Hi, Esther from the Age over here. Governor, as you mentioned in your slides earlier, the ringgit has actually appreciated quite strongly against other currencies. So my question is this actually a desirable situation for an export-oriented country like Malaysia? And could you share maybe what is the net impact on the economy from this stronger ringgit that we are seeing?
Can I have another question on the economic sector? Okay, 2 questions from GG Press and DH. Over to you, Governor.
Thank you, Lisa. Well, I'll answer your questions first on the balance of risk to growth. As I mentioned in the slide just now, it is both subjected to downside and upside risk. If you look at the factors on the potential upside risk, includes, let's for example, if the advanced economy or the emerging market economy have pro-growth policies, that's where it will support further the economy. Second is that if we see more favorable outcome from the remaining US trade negotiations, that will also be an upside for global growth and that will support nation economy as well. Third is the higher demand for E&E. Why we say this is because given the AI developments and digitalization, that has resulted in terms of higher demand for E&E products. And we have also seen in terms of from the order books of the companies operating in the country, they have seen steady demand for E&E goods to support the developments in AI and digitalization. So that's the potential upside. If you see more of that export demand coming in, maybe on the upside. But of course, there could be some downside as well. So basically, you see 3 upside risks and 3 downside risks. If there's further slowdown in trade due to higher tariffs, that may impact global trade, that may impact global growth, that will have an impact on our growth as well. Second is that if there's prolonged weak sentiment, given the uncertainty that's lingering at the global economy, that could also have a downside impact on growth. And third, let's for example, if we have a more disruption on commodity production, worse than what we expected from the maintenance that we have planned for, that could also have an impact in terms of growth. So I would say there's factors that supporting an upside, there's factors that supporting a downside risk to the economic growth as well. Thank you. On the ringgit, we have never used ringgit to gain export competitiveness. And what I can say is that so far, I've got some statistics that I can share with you. Despite the stronger ringgit that we saw in the third quarter, we still register a higher gross export growth of about 6.7% in the quarter 3 this year. If you were to compare with the average gross export growth between 2011 to 2019, it was 5.2%. And if you look at quarter 2 this year, at 3.3%. So despite the strengthening of the ringgit, our gross export growth has been very, very strong. So that is what I would say in terms of the impact of ringgit on the export. Thank you.
Can I invite another round of questions on the economic topic? Okay, Anissa from Bloomberg.
Excuse me.
Here.
Excuse me.
Hello, Governor, Dr. Sriuze. I want to check, does BNM still have sufficient monetary policy space to cut the OPR if necessary, and how much policy space is there? Thank you.
Any more questions? Okay, here. Mahanum from Berita Harian here.
Assalamualaikum, Governor. Okay, mengenai inflasi dijangka moderate kan? So, macam mana pula dengan inflasi perubatan? Ada yang kata tahun depan akan meningkat 16%. So, lagi satu mengenai ringgit, adakah dia dah reflect fundamental prestasi ringgit kan? Okay. Itu.
Okay, the lady behind her.
Hi, Governor. Shafika from The Age. Do you think this strong GDP is going to sustain going forward? And do you think the ringgit may have appreciated too fast? Thank you.
Okay, Governor, perhaps these 3 questions, please.
Thank you, Anissa. On your first question with regard to the monetary policy. As you know, when we do monetary policy, we look at the outlook for growth and inflation over the next 1 to 2 years. And we brought down from 3% to 2.75%. And at this level, as I mentioned to you, it is appropriate and supportive of the economy amid the stable and moderate inflation. So if you look at that, that's why I always stress the point that it's important for us to have buffers. So given what we are seeing right now, and in terms of the growth that we are experiencing and the outlook for growth that we are seeing, so in terms of the outlook for inflation, we do have space in terms of either fiscal and also monetary policy if we need to take any action. But as I said, at this point of time, at 2.75%, it is supportive and appropriate of the economy and also amid the stable inflation environment. So that's on the monetary policy. Kedua, soalan berkenaan dengan inflasi perubatan, sebagaimana yang you sedia maklum, we know that inflasi perubatan di Malaysia adalah di antara yang tertinggi di dalam dunia. And we know that there was an increase in the inflasi perubatan at 14.7% baru-baru ni, and that is a one-off increase. What is more important to note is that dalam menangani isu inflasi perubatan ni dan juga kenaikan premium, kita telah mengambil langkah-langkah dari segi yang holistik di bawah riset kita tu untuk menangani kenaikan inflasi perubatan di Malaysia dan juga secara langsung kita dapat menangani kenaikan premium. Untuk jangka masa yang temporary ni, kita telah perkenalkan the 10% limit in terms of repricing. And we have seen that working very well. And this 10% repricing adjustment ni capture about 90% of the insurance premium. And the data yang reflective dalam inflation 14.7% tu, dia menunjukkan peningkatan harga dari segi mungkin produk-produk baru yang diperkenalkan pada masa kini. Jadi dia tak reflective of the 10% increase in terms of repricing. So that's in terms of the data. Tapi what is more important is that to really focus on this reset yang kita telah perkenalkan in terms of nak really revamp the MHRT punya product and enhance transparency, strengthen our digital health system, and expand the cost-effective options, and also to transform their payment mechanism itself. So these are the broad general strategic thrust yang kita telah perkenalkan dan kita dalam tempoh pelaksanaan pada masa ini. And insyaAllah, the base product tu, kita akan finalize the design by this year. Kita akan start pilot insyaAllah by next year. So that is the plan. And once we have that in place, the kenaikan premium pun boleh dikawal dengan lebih baik insyaAllah. So that's in terms of inflasi perubatan. Dari segi soalan ringgit sama ada terlalu cepat. As you know, dari segi ringgit, kita is market determined. We don't set a level for the ringgit. and we don't even influence where the ringgit will be. Our interest from Bank Negara perspective is to ensure that there's an orderly market and there's no excessive volatility in terms of pergerakan nilai ringgit tu. Itu objektif kita. Tetapi if we look in terms of the trend, what are the factors that is supporting the ringgit? Ada dua. Satu external. External disebabkan oleh the easing monetary policy by the advanced economy, terutamanya di US lah. Jadi the interest differential tu akan berkurang. Kedua, faktor domestik. Faktor domestik ni pertamanya adalah dari segi pertumbuhan kita. Prospek pertumbuhan ekonomi kita baik. Kita catatkan 5.2% for third quarter. And the first 3 quarter, 4.7%. So that shows a strong economic prospect. Kedua, our economic fundamentals is strong, diversified dan sebagainya. Ketiga, dasar-dasar kerajaan dari segi reformasi, dari segi structural reform. And this going into implementation, this has also enhanced investors' confidence that we are addressing our structural issues, termasuklah dari segi fiscal balance kita. So this also give confidence to the market. Dan keempat, dari segi investments. Investments yang masuk juga telah encourage the two-way flow of capital flow into the country. And this also help the support the ringgit. And kelima is in terms of the continuous engagement that we have dengan the corporates and the coordinated action dengan the government. So that has also provided healthy flow into the financial market. So all these factors ni yang determine the nilai of the ringgit itself. And we don't set a limit, we don't set a target, and we just come in to make sure that they orderly dan tak adalah volatile sangat, itu saja. And given the factors I mentioned above, we can see there's a lot more tailwinds ataupun all the factors tu will continue to support the ringgit moving forward. Dari segi soalan yang keempat tadi, sama ada GDP will be sustained. As saya sebut tadi dalam slide masa presentation, GDP kita is domestic driven. If we look at the elements and supporting the GDP, domestic economy ini, pertamanya consumption. Consumption continue to be resilient. It's still strong. Why? Supported by income that is increasing, supported by employment. Kalau kita tengok kita punya unemployment kita at 3%, which is very low. So people have jobs, people ada income. So that we continue to support consumption. Kedua, the government continued cash transfers, masih ada lagi sokongan. That we also continue to support our consumption. Elemen kedua, investment. Investment kita nampak ada public investment, ada private investment. Public investment kebanyakan infrastructure. And this will continue. Dah mula buat dah pun, dia akan continue. So dia akan support investment. Ketiga, private investment. Pun ada banyak juga yang dah di-announce and kita nampak dia punya implementation rate dia agak tinggi. Jadi all this will also continue to support investment and growth. Ketiga, export. Ekspor kita walaupun dalam suasana yang tak menentu, with all the tariff dan sebagainya, with the deal that we have now at 19% and we have more certainty, we have seen export is also strong. Although kita expect dia akan moderate, tapi dia masih lagi resilient. Sebab pertamanya E&E. Kita nampak the demand coming from AI developments globally, from digitalization, all this support demand for our E&E products. So that's why I mentioned just now, when we go on the ground, we talk to the companies that's operating in the country, they indicate strong order books over the next couple of months for the demand for E&E products. Keempat, tourism. Don't forget, we have strong tourism punya arrivals and also in terms of spending. And next year, we're going to have our Tahun Melawat Malaysia. With the increased flight connectivity, and we are seeing tourism is also becoming an engine of growth for us as well. In fact, if you look at the data point, the first 3 quarters of this year in terms of travel receipts is sama dah dengan what we saw for last year, the whole year. So meaning dia meningkat banyak. So next year with the Visit Malaysia year, insyaAllah we'll get even more tourists and they will spend more in our country as well. So these are the factors that will continue to support our growth. But of course, I said, given the outlook, given the uncertainty, kita memang nampak ada possibility akan moderate lah for 2026. Tetapi kita akan terus disokong oleh faktor-faktor domestik yang saya sebutkan tadi itu. Let me just invite my colleague and anybody wants to add anything on the Jisham or I'm not sure. All right, okay.
Okay, perhaps we can go another round of questions on the economic sector. Are there any more questions on the economic sector? Economic topics, sorry. Okay, if there are no more questions, oh, sorry. Lady in the middle.
Hi, Hayatun from The Sun. Governor, do you think ringgit can reach 4 ringgit by the end of the year? Sorry.
Any more questions on the economic topic? Okay, lady in the front.
Hi, Governor. I just have a follow-up question on the OPR. Just wondering, because the ringgit is strengthening, right? So does this mean that the OPR, based on the estimation, will it be maintained or will it strengthen the case for more restrictive policy stance? Yep.
Are there any more questions on the economic topic?
Thank you.
Okay, lady in the middle.
Hi, I'm Laila from RTM. You highlighted that the foreign direct investment (FDI) is increased purposely. So, what is your view for the 2026 on this, the FDI? Thank you.
Okay, over to you, Governor.
Thank you. I will take the first two questions. I invite my colleague Jisham to take the questions on prospect for the FDI for next year. Yeah. Okay. First, yang RM4 ni, is it your wish ke? No, as I said, kita tak determine pun the level. We don't even forecast a level for ringgit. But of course, you see the analysts out there, they do forecast the ringgit in position year end, but we don't do that. As what we said just now, they're market driven. So depending in terms of the flows that we get, and what determine the flows that we get is the factors I mentioned tadi tu. In terms of faktor luaran, termasuklah dari segi easing monetary policy kat luar negara semua tu, dan juga dari segi faktor domestik, dari segi polisi kita, prospek pertumbuhan ekonomi kita, dan juga efforts yang kita lakukan untuk menggalakkan the two-way flow of capital into the country. So that is what will determine ringgit. And we'll see where it goes from there. But as I've said, looking all those element and factors tadi tu, we see that all this will continue to support ringgit moving forward. Right, so that's on the ringgit. And OPR, whether given the strength in the ringgit that we can cut or increase OPR. As I said, our monetary policy, we look at two things. We look at the outlook about for growth and also outlook for inflation over the next 1 to 2 years. Not so much in terms of what ringgit is. We look at the ringgit in as much as how that's the strengthening or weakening of ringgit will have an impact on the outlook for our growth and also our inflation. Whether that shifts our assessment in terms of the outlook for growth and inflation. That will be the only consideration in us determining our OPR. And third, on FDI, let me get my colleague Najee Sham to respond on the outlook for FDI for next year.
Terima kasih, Governor. Berkenaan dengan FDI is that so far the first half of this year, we have seen a very encouraging numbers of FDI approval, 190 billion. And in the first 3 quarters of this year, in terms of the balance of payments and data, we have also seen quite a large increase in the foreign direct investment coming into the country. Moving forward, of course, when we look at it, there are several factors that would support the sustained flows of foreign direct investment into the country. If you know that we see that even though the global uncertainties remain elevated, the issue of tariff and so on, but the conclusions of a lot of trade agreements with the US have provided a lot of certainty, certainly for Malaysia, and this bodes well for investors in terms of undertaking new as well as expanding their investment in the country. So that's the first point. And second is that Malaysia's position in the global supply chain, especially in terms in the E&E sector, in the semiconductor, this is where there's a lot of demand and increased production. So that also positions Malaysia well to receive further investment in this area. And third is that the structural reforms that the government are undertaking, as well in providing a positive business ecosystem and in meeting the demand for skilled labor, that also contribute to make Malaysia to remain conducive for foreign direct investment. Of course, the global environment is a factor that would influence the flow of foreign direct investment, not only to Malaysia but globally. All in all, we are cautiously optimistic that we would be able to see continued flow of foreign direct investment into the country in 2026. Thank you.
Thank you, Dejisham. If I can just add to what Dejisham has mentioned, don't forget we also have these national plans, national master plans, which have a lot of projects. Contohnya NETR kita, NIMP, and the National Semiconductor Strategy. All these have projects identified. So this is also encourage more FDI to come in to support all these projects.
Now I would like to open the floor to the questions relating to financial sector. Any questions from the floor on financial sector topic? Lady here. No.
Can I ask one more question on economy? Okay. Because for the first 3 quarters, the average GDP has already reached about 4.7. Yeah. So it's near to the higher end of 4.8 target. So what is your outlook for the whole year? Will it reach the higher end at 4.8 or exceed the outlook?
Any perhaps questions on financial sector topic? Anyone? Okay, perhaps we can address this question first, Governor.
Thank you for that question. As I said, I think we are now already at the upper end of the range. It depends in terms of what are the kind of data points that we get for our Q4, and that will determine what will be our growth for this year. But looking at the high frequency data, what we have seen, for example, from the 3rd quarter, we do see that some of this does have legs that will continue to support us into Q4. So we do have strong assessment or projection that we might end up in the upper end of this range itself, between 4 to 4.8. We might not be within that range at the upper end, or if things get better, if the upside risks materialize, we may even go beyond that. So that is subjected to the upside risk materializing. But what I can say is that at this point of time, we can expect that the growth for the year would be at the upper end of this range.
Perhaps may I invite questions on financial sector from the media? No other question? No question on financial sector? Okay, otherwise, perhaps I move to the next segment, which is on other topics. Are there any questions on other topics? Okay, from GG Press.
Seiichi Oshima from GG Press. I'd like to ask a question about a phrase in the joint statement released after the trade deal. Well, in the joint statement, it says, well, to support a fair economic relationship between Malaysia and the United States government of the Treasury and Bank Negara Malaysia are in discussion to finalize their mutual understanding on currency policy. Could you explain a bit about its purpose and whether or not you see a possibility to set, a kind of a reference rate in future, or capital market deregulation?
May I invite another question? Okay, Governor.
Let me answer the question. I will also invite my colleague Deja Anand to come in to add on this if you want to. You know, this is part of the continuous arrangement that we have had with the US Treasury. And this is not an agreement, it's an arrangement. It's more of understanding between Bank Negara Malaysia and the US Treasury. And this is in line with our current practice, where we have shared our data points with them over a period of time. And as you know that Malaysia was placed under the monitoring list for currency manipulation in the past. And we were removed in 2024. Why we were removed is that because they were confident that we do not use ringgit to manipulate ringgit to gain competitiveness. How do we give that confidence to them? By sharing some of the data points of the past in terms of our transactions. And that is with the lag period of 9 months. So it does not disclose any strategic information at all. So with that transparency, so we have been taken out from the monitoring list, so which is good for the country. And the data that we disclose is, I said, like 9 months lag, is on a delayed basis. And this is partly of global efforts to also enhance the transparency of data sharing. In fact, most countries have already published the data points on this. And I just want to mention here that since some people did raise in terms of whether this could affect in terms of flexibility to manage ringgit, not at all. So we have the entire freedom in terms of managing our ringgit, in terms of managing an orderly financial market, and making sure there's no excessive volatility. So we remain having that flexibility. And in fact, in the arrangement, the US Treasury acknowledged that I think we do take our presence there in the market to manage the orderly market and volatility. So that is a very good acknowledgement from them as well. Yeah, maybe I'll stop there. Dijana, you want to add anything on this?
Yeah, thanks, Governor. So maybe just for context, the currency policy is only with respect to whether the exchange rate is being used for competitiveness purposes. So it's nothing to do with financial sector or currency regulations or rules that prevail in the market. And just to add to that, the data is also on two-way. It does reflect both, our intervention does reflect two-way intervention, where we ensure orderly markets on both sides. I think all in all, it's not something that new that we're doing. We have been working with the US Treasury in the past for several years already, and it's just another level of transparency. Thanks.
Okay, I would like to open the floor for the last round of Q&A. Okay, lady in the left side here.
Hi, Governor. Jocelyn from The Edge. So I just have a question on data centers. As you mentioned that it grew exponentially and is largest FDI. So is there any concentration risk that BNM Bank Negara is observing as of this time? And is there enough distribution of financing kind of being channeled into data centers to support it?
Any other question? Okay, that will be the last question for the day. Governor?
Let me also get DG Aznan to also come in from the financing perspective of the data center. So what we have seen thus far is that there's no concentration of risk in terms of data center. I would like to share this story about data center. You know, I think if you were to have all those data centers that has committed their investments in the country, that will give us about 3,500 of megawatt of capacity. At the moment, we have seen about 20% of it being operationalized. And from this 20%, it has already contributed some values. One is that we have seen in terms of the import of ICT services coming down. Second is that export of ICT services going up. So that has actually generated a positive outcome for the country. So that's based on the 20% that has operationalized. Imagine if that 80% is operationalized as well, the prospect will be even higher for this, for the economy. And besides that, there's also backward and forward linkages to the industry in Malaysia itself. And this will create another new source of growth for the country. So that's from the data center perspective. From financing, most of data center are actually coming in via investments. But let me just get my colleague Nejaznan to just share with you whether do we see any financing coming in to support the data center or not. Go ahead, Nejaznan.
Thanks, Governor. I think we can confirm that based on our surveillance as well as supervision, there's no concentration risk on data center. In fact, our banks are subject to single customer exposure limits, which limits their ability to overly focus or concentrate on any single or group of companies. Thanks.
If I could add a few more points about the data center. The first is that between 2021 to first half of 2025, we have received about 144 billion investment approved in data center. We Bank Negara estimate that the direct impact of the data center investment to GDP is about 1% for 2024, worth about 14 billion ringgit. The third is that in terms of financing, if I could elaborate that in addition to the financing that these data centers obtain from Malaysian banks, they also bring in their own equity. So this is what we see in the actual data center foreign direct investment flow that we recorded in the what I call it in the balance of payment. So in fact, for example, the third quarter, we recorded about 8.5 billion FDI flow in the balance of payment. Almost half of that is accounted for by the data center. Finally, is that in the latest quarterly bulletin, we have a box article on data center. I would like to encourage you to have a look at that box article where we articulate some of these points further. Thank you.
Thank you very much for all your questions. We have come to the end of our press conference today. Governor, may I invite you to give your closing remarks?
Thank you, Lisa. Together with my team and Dr. Uze, we both would like to thank you for attending the press conference today. Before I end, I would like to encourage you to check out our box articles, as one was mentioned by DG Sham just now, the economics of data center in Malaysia. The second one is Malaysia's short-term external debt. It provides some insights on its key drivers of this short-term external debt. That would be a good reading for you all, a weekend reading for you all. With that, have a great weekend and terima kasih semua.
Thank you, Governor.